Joe and Jason here on this Tuesday. I hope you're having a fantastic day. Yeah, the weather, it was nice. It's going to get hot again. And then it's going to be fall. It's coming very, very soon. The election closing in. And once again, it's another all-time record high in the gold markets as, well, let's face it, I think everybody's kind of figured it out, right? We're in this crazy world where everybody's throwing the bazookas out. You know, we went 50 basis point rate cut yesterday. We warned you yesterday that China was getting ready to also unleash a bazooka. They did just that this morning, lowering rates across the board. I mean, they went big with it. Gold rallying on that. And remember, we've got inflation data coming Thursday and Friday this week. We've got everybody and their mother talking as far as the Federal Reserve goes this week. And none of it, I think, is going to stop it. One of the big companies, you know, we've been talking about, hey, when's this gold pullback going to come? Right? When's it coming? When's it going to get here? And last week, you heard a lot of chatter about it. And I talked about it yesterday. I said, well, I read them all. I was hoping, hey, give me something here. Tell me something. And the only thing you really got was, well, it's been such a huge rally. I guess it's got to stop at some point. Well, as of this morning, most of them have closed the books on their short trades. I want to say TD Bank lost like 4.5% of their money, and they got out early. They got out before, I want to say it wasn't even yesterday. I want to say they got out Friday of the shorts. Jason, it just looks like gold and silver are going to head higher. Silver's having a good day today, really good day, up almost $1, $31.50. Word out of Goldman Sachs saying the gold desk is flooded. All the big guys now, ETFs, flowing in because I think everybody agrees inflation didn't get fixed. We got some benefit of some good numbers, you know, falling off and bet, you know, I would just say more a victim of circumstance than the Fed actually solving anything. And now Goldman Sachs says, hey, not only is the gold desk being overrun, silver is starting to follow. And this has been the one piece we haven't seen, right? We've seen the demand, right? Central bank buying. We know about de-dollarization, all these BRICS countries wanting to buy gold. But the one thing that we didn't see was what they like to call the institutional investor. That's your Wall Street paper guys. And according to Goldman Sachs, Jason, that has come to an end. They are going into it. I think they're setting themselves up for next year. This is what they're getting ready for. And I think this is, you know, we keep telling all of our listeners, you got to get ready for the reality. This is just a simple math problem. It's really not that complicated. And, of course, if we don't get the big stock market rally next year, you know, this year the debt, it's already over $2 trillion. Now, the year's coming up. We only got like a week left in fiscal year 2024 for the federal government. The actual deficit is a little over 2.2. I don't know how you can get two different numbers on the debt. I mean, here's what was the debt on the first day of October. The last day of September of last year was X. The last day of September this year is Y. And the difference, that's the number. Well, not when you use our federal government. They somehow can come up with a smaller number. But over $2 trillion, it's really about 2.2, 2.3 trillion. And that was because Wall Street had a good year. It really did. Great capital gains and things of that nature. You got to remember, we had a lot of major selling guys like Warren Buffett, guys like Jamie Dimon, guys like Bezos, right? They were doing big selling. So the government got an extra, $300-400 billion from that. If we don't get that next year, again, you say, okay, well, 2.2, let's add 3, that's 2.5. Wait a minute, the economy's getting even slower. All of a sudden, $3 trillion is probably something that we're going to end up having to talk about. And on top of that, the Federal Reserve has decided, Jason, that the best thing to do is try to create more money out there by lowering rates. And I think we're going to see this all over the world once again. And it's just this perfect storm that's going on in the gold and silver markets. Our toll-free number, 800-951-0592. We did get housing today, housing pricing today, another record, right? Another record. And now rates are coming down. I mean, I don't know. Is housing going to pick up? We haven't seen it yet. Let's see. And of course, if it does, what's going to happen to the price? Right? And this is something where, I think they were almost ready, right, Jason? People were almost ready to kind of give up and start lowering housing pricing, but nope. It's another record. And then consumer confidence. Something very interesting in that number. We'll talk all about that and more when we get back. 800-951-0592. Joe and Jason, Patriot Radio News Hour, here on this Thursday. Let's take a look inside the markets right now. The Dow is up 100, mostly because any bad news is good. And today the bad news was consumer confidence. Remember, Wall Street wants big cuts. They want 50 basis points next meeting, 50 basis points in the December meeting, right? 50 basis points starting off 2025. So get ready for this. The S&P's up 2, the NASDAQ's up 10 points, go kind of, somewhat quiet. The 10-year note got as high as 3.8 this morning. After the consumer confidence number, it's back down to 3.75. Crude oil's up $1.50. Most of that is China. So the Chinese bringing out the bazooka today to try to get their economy going. Gold, as we talked about, a new all-time record high, $2,647 right now on gold. TV gold, 2,670, I think maybe as high as 2,675. So we're already, we're pretty much at where I told you we were going to be. And don't be surprised. Will we see 2,700? It's crazy, right? We can see that this week. I think it'll just depend on right? Friday, Jason's thinking Friday. We'll see. I think the inflation numbers will be a big part of that. The dollar getting somewhat of a beating. The only thing not performing really is the yen. The Japanese yen. Listen, we told you yesterday too, that trade's not over. Get ready. Because a lot of things are all coming to a head. And I think what you're going to see, and I've said this over and over again in the year of chaos, I think we get the highs this year. I don't know where they're going to finish. 2025 is going to be a very different year. You need to be more diversified. The most diversified you have ever been. Ever. Look at what gold's doing right now. And everything's still good. Right? I mean, you got Dow pretty much at a record high. S&P pretty much at a record high. Right? Everything's still pretty good. But when it isn't pretty good anymore, that's when you're going to really be thankful that you were smart enough to be more diversified. Check out our friends over at YRefi. I keep talking about it. I keep hammering it into your heads. Up to 10.25% fixed rates of return. You got big dollars in an IRA, right? You know that you can take some of that and put it in gold and silver. We do it for people all the time. You guys already know that. You can take some of it and give it to YRefi and say, hey, you know what? For this amount of money, I'm going to get 10.25 or whatever it is. You can use it as income. You can turn your income on. You can turn it off. You can compound it, right? You know these guys. They don't play games. There's no fees. You got to have $50,000 or more. That's the key there. Check these guys out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-YRefi24. That's 888-973-3924. Jason, it's interesting now how consumer confidence, that's not a big number. That's kind of a hokey number. They call people on the phone and kind of ask them these very vague type questions. But the big drop in the present situations, confidence fell from 134 to 124. Consumer confidence for expectations. All right, so how do you feel for the rest of the year? It went from 86 to 81. I mean, that's a really big drop. The headline number came in at 98.7. By the way, the biggest drop in confidence going back to August of 2021. And what made it interesting, Jason, was the main thing that they were worried about, the consumer losing confidence. It had nothing to do with Donald Trump or Kamala Harris, which we've seen a lot of that in these confidence polls, right? When the Republicans think Trump's going to win, they feel good. When the Democrats think Harris is going to win, they feel good. We didn't get that this time. Matter of fact, what they were talking about was the labor market. A lot of them said fewer hours. Some of them said fewer job openings. Of course, others said, I just lost my job, and yet others still said, I'm getting ready to run out of unemployment benefits. So, Jason, this whole confidence number, it came in well below expectations, but it was all about the details. It didn't have to do with the election. It simply had to do with work. And people are like, yeah, okay, you know what? Maybe I didn't lose my job, but I'm not getting any overtime. I didn't lose my job, but I got my hours cut. I was working 38. Now I'm working 28. I lost my job, right? And then others still were like, well, man, I lost my job 8 weeks ago. I'm getting ready to run out of benefits.
Yeah, that's another thing about these jobless numbers. That it's just not the same working environment as decades past. What about all those self-employed guys? You can't grab unemployment when suddenly your self-employed gig just goes away, right, Joe? You're not really unemployed, but you're not working, right? And so there's a whole lot of that going on where guys that are working the 1099s, self-employed, are not finding work anywhere. And their best bet is to get into a W-2, like a working situation. So the employment looks like there's more people there, but there's also a lot of self-employed, what I call like a non-business owner business, right, Joe, which is employment, really. That's what I was as a process server. I was a 1099 independent contractor. If I had no papers to serve, I don't really count on the unemployment, Joe. So that it's a very unusual circumstance. I think it's much more severe than the news or anybody's letting on. I think it's much more severe, Joe.
Yeah, and we're sitting here watching all of this play out, and I think it was interesting. I think the amount of people saying, hey, my hours got cut. That's kind of the, okay, after hours get cut, right, if that's still not enough, then the layoffs will follow. But when your hours get cut in this environment, it really does make it hard. By the way, hotel workers now striking across the country. 15 hotel workers in San Francisco have now walked off the job, a total of 13,000 of them in just the last 3 weeks in Massachusetts, Connecticut, Hawaii, Washington, California. This strike is growing here. Boeing, by the way, gave their last and final, and it got rejected today by the union. 30% increase over the next 4 years with a $6,000 bonus has been rejected. And Jason, we still got the longshoremen. They're getting ready to, I hope this doesn't happen, but there's only a week left on that one. That strike affects all the eastern ports, from New Orleans all the way through the East Coast. And everybody, Jason, I mean, when you see these numbers, 30% increase, that's not good enough, right? That's not good enough. 25% increase, not good enough. And it's really starting to have an effect here. It's going to be interesting how this inflation thing really shakes out. And I think this is why Goldman has been reporting a huge increase in people, institutional investors going into these gold and silver markets. They're betting the Fed got it wrong again.
Well, what do you think, Joe? I mean, it seems like the Fed doesn't it kind of like they seem like they know exactly what's going on, and they're making decisions specifically with what's happening with it. Sometimes it seems like they make really bad decisions, and like they really don't know what's going on, Joe. I know that over the years you've kind of been on both sides. Where do you think they are right now?
I think they know. Listen, and I've said this for a while. There was no good choice here. There really wasn't. They never fixed the crisis from 07 and 08. It never got fixed. They papered over it with debt, and debt the world has never seen before. And COVID on top of it, right? That was another great way to cover up a lot of these problems. And we said it all along. Inflation will come down in only one way. Millions, tens of millions of people need to be fired. Period. It's the only way. Look at housing. Prices are still rising. And they started cutting rates. Right? They started cutting rates. Does that make housing go down? No. Actually, it's going to do the opposite. Especially if they cut the way Wall Street wants them to cut rates. But here was the choice. Crash the economy or print money. I mean, that really was the only two choices. Now, they call it soft landing, right? Oh, we're trying for a soft landing. What's a soft landing? Right? What is that? What is that, a soft landing? What, magically, you're going to be able to, by quote-unquote lowering the interest rate or raising the interest rate, you're going to be able to control the economy in such a way where inflation, like I said, they've done everything to get the lowest number possible. You've got strikes. Think about who I just talked about. Let's see, Boeing striking. The longshoremen are getting ready to strike. The hotel workers are striking. Everybody's striking now. Now they're talking about striking at Ford and Stellantis again. Donald Trump talking about we're going to hit John Deere with 200% tariffs. And John Deere's like, screw this, right? We're just going to move to Mexico. We don't need to deal with this. And at the same time, they're just printing money like crazy. We're sitting here, $2 trillion, and our great leaders decide, well, hey, guys, how about if we just agree to keep spending the same amount of money for the next several months? Not because they're trying to figure out how to cut money. No. because they can't quite agree on how to spend more money. So let's wait until after the election, and then we'll see if those people can agree on how to spend more money. And then people wonder why the rest of the world is trying to hold less dollars. And remember, that's another thing on the horizon. Next month, we got the big BRICS meeting. We're going to see how many new members are they going to allow in. I don't know the answer. According to BRICS, they've got 34 more countries that want to be officially part of it. What are those countries doing? Oh, that's right. They're all buying gold, aren't they? Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. $20 gold. It's the place to be right now. As all the rest of the fractional gold market, the $10 liberties, the $10 Indians, the $5 liberties, the $5 Indians. Matter of fact, I'll just say this. Tomorrow the prices on all those are going up. Gold sitting now at a new all-time record high. Now we're $1 away from $26.50. And listen, it's not stopping there. But $20 Liberties and Saints, $2,775. 10 or more, $2,750. 20 or more, $2,725. So you buy 20 or more, it's like $75 over spotted. Jason, it's just a great place to be able to buy gold this close to spot. I know you're like, gosh, where's this pullback? It's not going to go straight up. There's going to be pullback. Don't worry, there will be. They're going to be short-lived, and they're going to be bought. Why? Just look at what's going on. Everybody's cutting rates. Everybody's throwing money. Inflation's not gone. We got workers striking everywhere. We got companies moving to Mexico. Who was it? Ford just started laying off people in Missouri. Why? Because no one can afford to buy anything. People are now saying my hours are getting cut. I'm getting fired. I've been fired. I can't find the jobs. And then for those of you like, come on, Joe, I mean, I don't have that kind of money. I got a great deal. You want silver? What a day. Great day for silver today. Up 95 cents right now, 31.60. Rolls of silver quarters at $230 a roll. And just to kind of give you guys an idea, that's $32.16. You're talking about, I don't know, it's like 20 cents over cost. 20 cents over cost on U.S. government hallmarked silver. Rows of silver quarters at $230 a roll, right? And then, of course, the incredible price on pre-1933 private, right? That we love privacy. You can buy it, sell it, trade it in any amount and not worry about a 1099. Again, $27.75, 10 or more, $27.50, 20 or more, $27.25. Heck, we can be $27.25 before the end of the week. We really can. I don't know. Listen, we don't know. We don't know where it's going to play out, right? But we've got a pretty good idea of what we think the inflation data is going to look like. And I just looked at the consumer confidence number. It wasn't the number I cared about. It was what they were saying. And all of a sudden, this is the first time I've seen it in this report. They're worried about their jobs now. I don't know what's going to happen with all the Boeing and the furloughing and all of this stuff. Thursday's jobs report could be a big one. Could be a big one. I don't know. We'll have to see. But if it is, look out. Right? We get a big jobless claims number and a good-looking inflation number. Yeah, this is going to be rally on the bad news. The worse the news, the better for gold, because they're going to say more rate cuts. That's why. That's what they're going to say. And Goldman out with a big note. Listen to this. They said something very remarkable happened back, and it started in 2022. The gold ETF and the price of gold suddenly disconnected. So since the gold ETF's inception, if you actually charted it, the paper markets controlled the market. That's what the chart will show you. When there was inflows into the paper gold ETF, gold was going up. When there was outflows, gold was going down. Goldman says that ended when the Ukraine war started, and that the physical gold markets had completely decoupled from the paper gold markets. And now Goldman says after 2 years of this, the paper guys, Jason, they're throwing in the towel and they're starting to join the party. And now it's got Goldman saying, hey, listen, don't rule out 4,000 gold now, because the paper guys are joining the party. But why are the paper guys joining the party? I think the answer is pretty simple. They think inflation's coming back, Jason, and we've talked about that. We think the Fed's going to lower rates and then eventually have to raise rates because inflation comes roaring back.
Yeah, 4,000 gold. So that's something you mentioned. So we got these $20 Liberties on sale today, right? A lot of people ask, well, how many ounces should I get? I'll tell you right now, it's savings. How much money do you want to save? So as much as you can possibly save away. Get as much gold as you can get. But as far as somebody who's trying to be more conservative, we've mentioned a few times over the years, how old are you? Get an ounce of gold for every year you're alive. Maybe another ounce of gold for every year you've been married. There's ways of looking at it that way. But let's look at it simply, okay? If you have 50 ounces of gold, if you've been able to achieve that, you've saved and saved and saved, and you put together 50 ounces of gold. When gold moves up $10, on that day your gold went up $500. $10. Your gold goes up $10 on your 50 ounces. Now, not a lot of people don't have 50 ounces, but a lot of our customers do have 50 ounces. If gold goes up $10 an ounce, you just made $500 that day. That's pretty decent. That's a pretty good haul, right? Well, Joe, we're talking $500 more. We're talking $1,000 more in a short time span of a year. So if you think you've gotten enough gold in your portfolio, well, this might be a time to rethink that, right, Joe? You might want to put a few more ounces in that bag, right?
I'd put more than a few if you can afford it. Absolutely. When we get back, an update on Enbridge. What's Enbridge? I'll remind you what it is. And the Bank of International Settlements, they love it. We'll be back. 800-951-0592. Patriot Radio News Hour here. Gold, new record highs. Just so many things happening. Enbridge, which is the cross-border payment system created by the Chinese. By the way, they're using Ethereum, in case you wanted to know. But that's the blockchain behind it. It launched in 2021 through the Bank of International Settlements. Why does that matter? Why is this important? Well, currently they have 5 full members. Thailand, which is, by all accounts, we think Thailand's going to be part of BRICS at the October meeting, along with Malaysia. We just don't know who else. China, Hong Kong, Saudi Arabia, and the UAE. Now, all of those members, obviously China, Hong Kong, the same country, but it's out of Hong Kong. all of those other countries, they're already all BRICS members. They said that they have what they call 30 observing members. So it kind of gives you an indication, doesn't it, of, boy, are we going to see BRICS, which now has 11 members, are we going to go somewhere close to 35 that quickly? I don't know that. But it's kind of interesting. And these observing members continue to grow. They're talking about a bunch of countries going through the process. Because what is an observing member? It just means, hey, I get to use the system. Right? I get to use the system. Of course, the idea is a multi-central bank digital currency platform. Right? As I told you, it uses Ethereum. It has been developed by the China's Digital Currency Research Institute. Because it's through China, the mBridge is immune to Western sanctions. How about that? So if you become a member of mBridge and you make the United States mad, doesn't affect them. You can't cut them off. One of the things that they're talking about is that they finally, on June 5th of 2024, it reached the minimum viable product stage. What does that mean? That means it became fully operational now. So they've had all the tests. They've made transactions, and as of the middle of June, it is fully operational. And one of the things that they noted was that the majority of these members are now all buying gold. And remember, gold got reclassified as a Tier 1 asset. What was that? 4 or 5 years ago? Which now allows these central banks, it's viewed just like a treasury. Right? They got the same, I guess, value, if you will. And what they're doing and what they're seeing, and the Bank of International Settlements was noting that it seems that all of these participants, Jason, continue to be buying gold. Remember, Saudi Arabia, which didn't want to announce it, they had been buying gold since 2022, and it just now came out. But they're saying that this trend looks like they're continuing, and what the Bank of International Settlements is saying is what is happening on their balance sheets, these central bank balance sheets, is they're holding less treasuries and holding more gold, Jason, across the board.
Well, that's de-dollarization, right, Joe? That's what the BRICS is all about. That's pretty much why they were created. And most of the BRICS nations, especially the original 4 or 5 of the BRICS nations, are all about, acquiring more precious metals before gold was moved to a Tier 1, right? So here it is. I think Tier 1 has a lot to do with not just the value, but the risk, right, Joe? I think the risk, they decided there is no risk in it, right? Dollars are supposed to be, Treasury is supposed to be very low on risk, but starting to look a little more risky to be in Treasuries, doesn't it, Joe? It seems like the inflation is really making dollars not so strong.
Well, and of course, oil's the biggest player, and it doesn't matter. Forget everything else. They start buying oil in non-dollars, it's going to have a huge effect. Let me walk you through what's been going on. November of 23, Saudi Arabia and China, a $7 billion deal to use local currencies and facilitate trade. In September, the Saudi minister came out and said, hey, we will now include the renminbi in crude oil settlement. So in September, they were trading other stuff, right? But not oil. That changed in September when they said, hey, we will now use the renminbi. And by the way, the Saudis became a full member of mBridge in June. They renewed currency swap lines, the Bank of China, with the United Arab Emirates in November. of 2003. They also say now that it is fully operational, the UAE executed its first instant with the digital yuan using Mbridge. And Jason, we know what comes next. The UAE hasn't announced it yet, but I'm sure they're going to. Hey, we're going to take renminbis for oil. Yeah. I wonder if that's why all these institutional investors are running into the gold markets and like Goldman said, overrunning the gold markets right now. 800-951-0592. $20 gold pieces, just red hot pricing right now. 1 through 9, $27.75. 10 or more, $27.50. 20 or more, $27.25. And don't forget, rolls of silver quarters. Practically cost, just above cost, at $230 a roll today at 800-951-0592. And this just came out. Goldman Sachs is reporting talks have broken down with the 45,000 longshoremen. They're expecting a strike on October 1st. Now, listen to this. I didn't even know this. They want a 77% pay increase over the next 6 years. Wow. Wow. Talks are not going well. In fact, they're not going on at all. According to Bloomberg, in a note out this morning, that the longshoremen said the employers have taken advantage of low wages and tiered progression for 30 years. And they, right now, Jason, no talks happening there as well. So I don't know where all of this ends up, but these numbers are crazy. It's insanity. And they're talking about they've got a lid on this inflation thing. I don't think so. And it's no wonder why everybody out there is starting to question what the Federal Reserve is doing. But to your point, I think they know exactly what they're doing. They had two choices, right? Crash it or print the money, and they went with print the money.
77% over how many years?
6.
So about 12% a year, 11% a year.
Yeah, they're almost 13, almost 12.8% a year. That kind of gives you an idea of where they think inflation is.
That might not be enough. we know that things could get much worse than that. The employer might want to sign that sucker. You know, so 77%. We could have, in 6 years, everything could double. And that 77% is going to be a 23% savings on the employer. Here's the thing, though. Employers know that if you sign those contracts, that they're going to come back and renegotiate when things get worse.
Yeah, well, so I'll just say this: I don't know. We used to laugh about having to have a minimum wage of $30 an hour, and the Big Mac combo meal being $30. We're closing in on that. I mean, think about just in the last week, Bank of America now says $24 an hour. And then they said next year it's going to be $25, right? Amazon just took all their non-contractors to $22 an hour. I forget who was on. Someone else just went to $23 an hour. The longshoremen want a 77% raise over 6 years. We got hotel workers striking, and at the same time, people are getting their hours cut all across the country, if not outright losing their jobs. And here comes more money printing. Could it be? I didn't think about that. That may be a bad deal. I don't know. Yeah, I know this. That's why everybody raised their cold forecast, including me. Patriot Radio News Hour. Get it put away. 800-951-0592.